All right, 1 second. All right, cool. Looks like we're on YouTube. I'm gonna post this link on there too, just in case people want to hop in to the actual Zoom. I know we get a lot of people on YouTube that are asking questions and they can't ask them on there because I'm not on the YouTube. Okay, cool. So we're on the YouTube now. I'm gonna close this out. I'm just gonna move this over. So if we want to look at this later, I know some people want to look at the strategies. We'll take a look at that in a bit too. But yeah, guys, welcome. So like I said earlier, if you guys are new here, we have a Q&A box button somewhere around there in the corner. If you guys have any questions, feel free to put them in the Q&A, and I can pretty much go over, any pairs you guys want me to analyze, any strategies that you guys have any confusion with, or any trades that you took and that didn't go your way. We can go ahead and analyze that and see what went wrong. But looks like we have a couple questions here already. So let's get started with these right here. So we have one from Pilates said, let's analyze US 30. So let's take a look at that. That was a hot asset to trade today. So I'm just going to mark the open for the US market, which was right here, 6:30 a.m. It's when the stock market opened. And then again at midnight. Because I know some people took the London entry. But yeah, just looking at here, this was a huge drop. And you can see the drop actually started from the London open. So I'll go over, the London entry. I'm going to go over the US 30 strategy that we take on the daily for each session, for London and for US session, just so you guys can see, what we were looking for when we took this trade. So I'm just going to rewind to right here, and then I'll put the requirements up, for the specific strategy, so that you guys can see, what we were looking for when we took this trade. I know Marcus called this last night. Let me go to the chat. So I think Marcus called it. It was either Marcus or Ariane, but let's see. Unofficial. Yeah, so Marcus usually calls, this is the same strategy we call during the US session, but Marcus and Ariane call it during London session because I'm asleep during that time. But yeah, he called it right here at 1:30 a.m. He has it analyzed right here. Same thing that we have right here. I'll explain exactly how he determined that. And if you guys have access to the K2 indicators, you guys can trade, all these strategies on your own. You don't have to depend on me calling signals. Marcus doesn't even depend on me. He takes these entries on his own. But I'll show you what we looked at. So this is going to be the daily, the K2 daily US 30 strategy, and we usually use it mostly for New York and London. So the first requirement, let's change the color for this so it's easier to look at, and I'll just make it a little smaller. There we go. So the first thing we look for, if you're taking it during New York session, you're going to look for trades on New York Stock Exchange Open, which is, or we'll start with London, on London Open, which is going to be 12 a.m. Pacific Daylight Savings Time, or New York Stock Exchange Open, which is going to be 6:30 a.m. Pacific Daylight Savings Time, which is my time. That's LA time. So depending on where you're located, the time's gonna be different, but it's not gonna be a huge difference. You guys can figure out, what's the actual time for your specific time zone. And then after that, you're just gonna take the first valid K2 signal that appears, and then you can enter on the open of the following candle. And I'll explain, why we do this and how the strategy works. But I'll just show you first what we do. So first, you're gonna look for trades, after London Open or after the New York Stock Exchange Open. So it's pretty self-explanatory. You're gonna look for trades after the London Open, which is 12 a.m. my time, Pacific Daylight Savings Time. So right here, you can see that I have it marked up. This is gonna be midnight my time. So after this candle right here, this is when the London market opened. So after that, you're just going to take the first valid K2 signal that appears. The first valid signal is going to be, one of these red sell candles or red sell signals with a red candle in it. This would be a valid buy. This would be a valid sell. This would be a valid buy. This would be a valid sell. These are valid right here. These are all valid. I'm going to show you guys I'm gonna try to find one that's not valid just so I can show you guys. I know a lot of you guys already know what that is, but for the the new people here, I'm just gonna show them what it looks like. So right here, this is a red sell signal, but it's a green bullish candle inside. So this would be invalid. So this would be valid because it's red and red. This would be invalid because it's green and red. Same situation right here. It's a green buy signal, but it's a red bearish candle inside. So if they don't match, if it's red and green, it's invalid. If it's green and red, it's invalid. Green and green, valid. Red and red, valid. So easy as that, guys. We'll go back to what were we looking. So the first requirement was met because we started looking for trades after the London Open, right? After that, you want to take the first valid K2 signal that appears. So right here, we have a valid sell signal. So once you have that, you can go to step 3, enter on the open of the following candle. So right here, we're going to enter a sell position, and this is what Marcus called yesterday. So he had right here sell stop, that specific price, same exact entry. He's following the same strategy that everyone can, everyone that has access to it applies the strategy. And if you guys want access to it, it's real simple too. So right here, here's the entry. Generally, we trade for 150 pips. Sorry, 150. So if you're trading on Hugo's way, that'd be, it's measured by micro pips. So that would technically be, yeah, actually, let's go to Hugo's way or let's go to Oanda data because that's what most people use. I just use this data because this is what FTMO uses now. But we still stick to Oanda, which is the same thing. So let's go back to that same position. I'll just put the things back on the chart. So right here was 6:30 for London, and then midnight for London session. So let's go back, same exact thing, same setup. It's just different data. It's just that since most people trade on Hugo's way or like unregulated accounts, it's measured by micro pips. So instead of 150 pips, it's 1500 pips, and that's generally how we measure our trades. So you can see here, it's just a small difference. Like instead of saying 150, it says 1500. And that just matches up with most of the brokers that people use. So I'm gonna go ahead and put the requirements here again. So same exact thing. Look for trades after London Open. London opened right here at midnight. After that, take the first valid K2 signal, first valid sell signal right there. And then after that, you can enter on the open of the following candle. So we generally enter once this candle closes. You can enter at market, you can enter at sell stop. It just depends on when you're entering the trade. But if you're going to enter right there, you're going to set your stop loss and TP for 1500 pips. That's generally the sweet spot. And then if you guys want to have a TP1 or TP2, generally TP2 would be on the halfway mark, somewhere around there. And then TP1 would be half of that as well. And those aren't really targets that we're aiming for. Those are just reminders that once price reaches that area, you should probably move your stop loss and profit to TP1 to guarantee profits, or TP2 to guarantee profits down there as well. So in that situation, if price was to, come down like right here and then reverse super hard, which happens sometimes, you would have locked in this much profit right here. So, it doesn't hurt to lock in profit. You can never go broke taking profit. And then if you just keep stacking those wins, you're going to be pretty profitable at the end of the week, at the end of the year. But okay, so we have these set up right here. It's good to go. Everything's lined up. Let's let this run. And then there you go, full TP. So if you took that trade, like most people did during London session, full TP right there, 1500 pips. It's as easy as that, guys. It's not rocket science. It's really simple. And then same situation for the US session. So, we ran this strategy right here for London session after midnight. Same exact strategy for US session. So instead of looking after midnight, we're going to look for trades after the New York Stock Exchange at 6:30 a.m. Pacific Daylight Savings Time. So right here, 6:30 a.m., right? Same situation. We do the same exact thing. There's nothing different. So right here, we wait for the first valid K2 signal after the open. So after this opens, this is the first valid signal, right? Because like I mentioned, if it's a valid signal, it's got to be red and red or green and green. The reason why we didn't take this signal right here was because this specific signal came out when the market opened. And the reason we don't take the candle that shoots up right on market open is because there's a lot of manipulation when the market opens. If you guys are familiar with how the stock market moves, a lot of people take quick trades right when the market opens. But during that time, there's a ton of manipulation because, there's a lot of orders that are set from after hours that were set the night before, because the stock market's not open 24 hours. It shows that it's open on, on the Forex market, or if you're trading indices, but generally it doesn't really move because you can't enter and exit trades after hours. It'll set your trade in and then it'll fill on the morning after. So once all those orders are filled, that's why you see these huge spikes in price right when the market opens. But okay, so, same situation, look for trades after New York Stock Exchange open right here. And then we're going to take the first valid signal, which was right here. And, a lot of people were scared to take this trade, even myself. I called that trade this morning and, I kind of bitched out in the beginning. I went over here and I put, okay, this is not an official call, it's not going to be counted. I said I wasn't going to take it on my personal account, but, lo and behold, I took it on my personal account and look at the profits I made. You just got to trust the strategy. I trust my own strategy too, but the thing is, there was a lot of stuff going on this morning. So, like once this happened, I was like, well, whatever, I'm going to take it anyways. And, good thing I took it because I still profited regardless. It's been a profitable week for me, US 30, easy. But okay, so those requirements are met. Same situation. We enter on this close. There we go, right there. Same situation. 1,500 profit and stop loss, and then we let that run, and there you go, straight to TP. And a ton of people made profit off that trade. Applying this super basic strategy. So let me just go more into detail. Why we take this entry, and what's the reasoning behind it. So basically, the way that I've developed the strategy is if you guys have access to the K2 indicators, these vertical lines, they demonstrate momentum in the market. So obviously, if you take the first momentum swing in the market after market open, odds are price is going to continue pushing in that direction like it did right here. Because generally in the beginning, the institutions and market makers like to trick you. They like to push market in a certain way. So like, look right here. If we weren't taking this trade right here, or even right here, I'll just show you how they trick you. So let's see, the market opened right here, right? And then you see these bullish candles right here. What's your first thought? Your thought is, oh, price is going to keep going up, right? And that's how they trick you. So they let price go up a little bit. What happens here? A bunch of people enter buys because they're like, oh crap, it's going up, I should take a buy, right? But no, what happens right after? It drops like crazy. And that's how they trick you guys. And that's how people lose at trading, because they try to trade like everyone else. You have to trade like the banks, the banks are tricking you, so don't fall for their tricks. Same situation over here. Look at New York Open. So you see these nice bullish candles, right? Like whoever entered right here, like say if you entered a trade right here and then you got stopped out, you're like, oh crap, I got stopped out. I'm gonna try to, they stopped me out here, but it's got to go up here, right? Wrong. You get stopped out again. So right here, same situation. Huge bullish candle, right? And then right here, well, let's see what it's saying. TJ said, bro, can't hear. Can you guys hear me? Sorry, I don't know if you guys could hear me or not. I've been talking this whole time. Could you guys hear me? Let's see. I don't know if it's just TJ that can't hear me or if everyone can't hear me. Oh yeah, so everyone can hear me. I think it's just you, TJ. I'm not sure what's wrong with your maybe turn your volume up or something, but it looks like everyone else can hear me. But yeah, let me get very low voice. Let's see. TJ said my voice is low. I don't know. Could you guys can hear me all right, right? Yeah, no, everyone can hear me, TJ. I think it's just your computer. You might have to turn up your volume or something. Yeah, everyone else says it's good. But yeah, okay, so let's go back to what I was talking about. So like I mentioned, the banks, they like to trick you. So right when the market opens, they show this huge bullish move, right? And what happens? People that don't know what they're doing, they follow that bullish move. They enter a buy. And then what happens after they enter the buy? Because here's the thing, if you don't have the K2 indicators, it looks like a bullish move. Like I don't blame you guys for thinking it's a bullish move. Like just check this out. See, if you don't have the K2 indicators, you're like, all right, cool, to buy. Because you know what a lot of people thought? This is why I don't trade price action either. Because everyone who tried to enter this trade was like, oh, it hit support. So obviously it's got to go up, right? Wrong. That's why I don't trade price action, because If you trade how everyone else is trading, you're going to lose because the majority of people fail at trading because they all trade the same strategy. So the thing is, I don't trade, any of those strategies. I trade like strictly off momentum. I like to, piggyback off the big moves that the banks make and stuff. But this is a clear example right here. If you were trading price action, you would have thought that this was a support. So obviously you would buy. So right there, if you enter this trade, I just find it so funny because like a lot of people enter to buy right here. And honestly, I wanted to enter a buy too, but I wasn't gonna fall for the tricks. So if you enter to buy right here, you haven't gone stopped out. Right there. See, and then this same thing that I just mentioned, look, it tested the support again. This is a triple bottom, right? If you trade strictly price action, you're like, all right, cool, it's triple bottom. It's got to come up this time, right? So like, look what happens here. They trick you guys again. So it comes up and then it drops. Oh man, this is funny. Like, because a lot of people were like hoping, like they thought it was going to come up. So right here, they're like, okay, 1, 2, 3, triple bottom, right? Obviously it's going to go up, but whoever took a buy there ended up getting screwed. See, because it went through the floor. And this is why you got to trade differently. You can't trade how everyone else is. If you're trading strictly off support resistance, or you're trading whatever candlestick patterns that everyone else is looking at, that's how the banks get you. And that's why I don't trade that way. I mean, it's not a wrong way to trade, but more times than not, you're gonna get caught in these tricks. So if you have the K2 indicators, that's how you know how momentum's moving. So just following the strategies that I mentioned earlier, same situation. Look for trade after London open right here. First valid signal. If you took a sell right here, you would have hit TP off that. And then same situation over here. So valid sell right there because it was the first entry after the New York Open. So put that right there. And then if you took both of those trades, which I wish I did, I pulled out early because I'm not gonna lie, I was like tripping out because the market was moving crazy. But if I just trusted momentum, it's a double win right there for London and for US. But yeah, so that's the K2 strategy for a lot of people that were asking about it. And it's real simple. Like, you don't have to know much, you just have to follow the requirements. It's not too difficult. But okay, so let's go back to the questions. Let's see. All right, so I'm gonna go through the Q&A real quick. Hey TJ, put that question in the Q&A because I'm going through the Q&A right now. So I might miss your question, but if I'm done with Q&A, I'll come back to your question. But you're probably better off just putting it in the Q&A right now. So let me go back to the first questions over here. So Kevin said, what is the swing buy zone and down the current market configuration? So perfect. Let's go look at the market right now. So just looking at how the market is moving currently. So I'm going to go on the higher time frames because the lower time frames, you don't get a big picture looking off the lower time frames. So I like to go off the 4-hour and then I go down lower from there. So what I do first, like I mentioned, in the other webinars is, so this is what a normal chart looks like. It's naked, right? I add on the K2SRs and then I go and identify the rejection points. So I just draw these rectangles throughout the chart over here, just so that I can see, where price is rejecting from, because this gives us a better understanding where price is likely to reject from later or currently. So it's only 4 o'clock. I think the US 30 market's still closed right now because it's only 4. So it probably opens in about like 50 minutes or no, 40 minutes. So I'm just drawing this up and then we can analyze it for, when the market opens. So I know a lot of you guys are trying to hop into this. I personally don't recommend it because it's NFP tomorrow. So it's going to be risky. And this thing keeps moving. All right, so I got that there. And I'll draw this down here. And then I'll draw this right here. And you don't have to draw all these zones. You know, these zones are just for it's just for my knowledge, so that I know exactly where price is going to reject from. Because obviously you don't want to trade where prices is going to be rejecting from. You know, you don't want to enter a trade and then you get stopped out right after because you're trading in the wrong area. So once I draw these zones on here, I just hide the SR so it doesn't make the chart look all messy. And then there you go. I have all of the rejection points there. You can see price generally moves from zone to zone. So price goes from here, rejects off this zone up here, and then just bounces around from each zone, right? So looking at where price is currently, you know, once I have this set up, because I know where price is rejecting from, I turn on the pivots just to see what the trend is. So right here, obviously it wasn't a strong uptrend, right? And then it came down. So, you know, if you tie all these together, you're like, okay, it's in an uptrend, comes up, comes down, rejects off this point, comes up, rejects, comes down, rejects, comes up, and then comes down. So personally, it's moving right now. So it's slowly moving. I think this is the market starting to open again for US 30. But just looking at it right here, it's actually at a swing buy zone, Kevin. But me personally, I wouldn't take this trade because the momentum down is so strong. So once I have these set up, once I know where the rejection points are, I know what direction the trend is moving in. So it was obviously in an uptrend, then it reversed from up here, right? After that, I turned on the momentum indicator. So I cover pretty much, you know, all corners of analyzing this trade because I know where price is rejecting from. I know the direction of the trend, and then I know the direction of momentum. So basically, you know, if you get a sell momentum and price is trending up, it's just like a little retracement. It retraces down, and then once you get a buy signal of a momentum swing up, it just corrects back up. So right here, it comes down, rejects off that point, and then it shoots back up. Same situation right here. It comes down right here because it's a retracement. And then once you get a buy signal in the direction of the trend, it shoots up. So right here, the difference with this sell momentum is that it broke the trend. So the market's not trending up anymore. It's actually broken below. So the thing with this is that it could go two ways. It could either correct back up and reject off this rejection point, because you can see that it tested it over here already. So it tested it right here, and it tested it right here. But you can see that, you know, the trend is shifting the other direction. So this is one scenario. One scenario is that it could come down, reject off this point right here, and shoot up. Scenario number two is it breaks below, and then it either comes down here and corrects back up, or scenario number three, it could break below here, and then it could just keep going down because it would have established a downtrend, right? So there's a lot of different things that can happen here, but you can see right here that it's trying to break this this zone. This candle closes in about an hour and a half. So in an hour and a half, if this closes below, then odds are it's probably going to come down and test this next zone down here before either correcting back up or shooting downwards. So this is like one reason why I wouldn't trade this right now, because there's just so many different scenarios. You know, obviously if there was like one scenario where you could kind of get a good idea as to where price is going, then I would take the trade. But the problem with this is that there's so many different scenarios. You could probably reject off here, shoot up, you could shoot down here, then correct back up, or it could continue on downwards, you know, into a free fall. So like just looking at the chart right here, I'll just take off the momentum indicator because it's kind of messy. But you can see right here, you know, like one way to analyze this is just to go back in data, just see where it's happened before in the past. So you see this huge drop right here. Look where it happened over here. Same situation. It dropped, but it dropped pretty far. And the problem with this right here is that a lot of people got tricked. So a lot of people were like, okay, it's going to reject off this point, right? So people bought right here and then they got screwed. Same situation right here. They're like, all right, it's going to, I'll just rewind to that point so you can see, because it's the same thing. Like, let me just go over here. So, and I'll take this off, the pivot, just to clean up the chart. So you can see this drop right here, right? This, I guess you would call it a falling dagger, because like if you put your hand a bit below the falling dagger, you either get, you know, it either goes through your hand or you stop it. So a lot of people thought it was going to stop right here, because you can see that it was slowing down, but then it kept dropping. Same situation over here where it currently is. You know, people put their hand right here and they thought it was going to shoot back up from right here, but then the market's like, nope, and it pushes right through. Same situation again. So you can see right here, there's so many different points. Let's rewind to here. There's so many different points where people thought that it was going to stop. And you don't want to predict the stop. You want to go with momentum. It's like you wouldn't stand in front of a speeding bus or a speeding train, praying that it would stop. You want to go where the speeding train's going. So like right here, you can see that it rejected off the zone, right? So people are like, okay, cool. It's going to shoot back up because US 30 always goes up, but that's not always the case. Right here, it shoots back down. So people probably got stopped out right here because how many pips is that? That's like 3,000 pips. You definitely got stopped out if someone took a buy right here. And then here's the second time. They're like, okay, cool. It's got to stop here. This is like the last support. But it doesn't. Look what happens next. It shoots down again. So this is why, I wouldn't risk taking this trade right now because there's so many scenarios. Like it's the same situation as it is right now. If you took the buy right here, it could still go this direction. There's no confirmation saying it's going to stop. But then again, right here, it continues down. See, until it shoots back up. But even when it shoots back up, it still drops a little bit to stop everyone out. And that's why I don't like trading when this happens, because when this happens, there's a lot of manipulation because there's people on both sides trying to predict, what direction it's going to move in. And that's just an example. So, going back to where price currently is over here, same situation. Like it could drop right here. And then if it rejects right here, people are going to buy because they're going to get tricked into, entering this trade because there's so much hype going on right now with US 30. So the thing is, if you enter a buy right here, odds are it could probably shoot down here before it shoots up, or shoot down here before it shoots back up. There's just too many, there's too many scenarios. Obviously you want to limit yourself to maybe 1 or 2 scenarios. But the thing with this is that there's like 4 or 5 scenarios here that can happen. Like here's scenario 1, it rejects off, corrects back up. Scenario 2, pushes down, rejects off this point, corrects back up. Scenario 3, shoots down here, rejects off this point, and shoots back up. There's just too many things that can happen, and why risk it? That's just the way I think of it. Like you guys got to trade smart. You guys can't just trade off like hope or luck or thinking that it's gonna play out the way that you want it to play out. You gotta trade with skill, and you gotta trade with strategy. You can't just like jump in and be like, okay, it's gonna come back up from here. But that's just my 2 cents. Like it could go either way, but I'm just saying there's like so many different scenarios. But there's one rejection point right here, which is at 28,117. The next rejection point is down here, 27,967. Another one down here, 27,684. And then, the last point right here, which is 27,088. But the problem is there's more zones down here. So even though we've only identified 5 scenarios right here, it could literally continue on further before it rejects up. Because it's going to correct, it's eventually going to correct. But how far will it drop until it corrects? Because look at this drop right here. This drop from up here was about 10,000 pips. You go back over here to when it happened previously. This drop was 30,000 pips. So is the drop done? I don't know. You guys can figure that out, but I'm not going to risk it and take buys here, hoping that it'll come back up, because the thing is, you got to look at sentiment too. So let's go to the IG sentiment. See, there's still a lot of people short right now. There's 62% of people short. So what I see happening here is I feel like the institutions and the market makers are going to mess with whoever's short right now. So since there's so many people short, I feel like what they're going to do is they're probably going to bring price down a little bit. And then they're probably going to spike it up a little bit to stop everyone out, so everyone gets stopped out. Because, trading US 30, it's an expensive asset to trade. This isn't something that you can buy and hang on to for like days, Like they're going to spike price up to here. And then what happens after that? People get stopped out. Then they drop it back down. And then people FOMO in and they try to buy it from there. And they do the same thing over and over again. They just keep spiking it up and down. Because the thing is, a lot of the retail traders, they can't handle this risk. This is a lot of risk here. If you're holding the actual the actual index, you know, the people that are holding the index, they're not planning on pulling out of the trade. They're just hanging on to it long term. So they don't even care if this is happening. You know, this only affects us, like people that are intraday trading. But the people that are holding this long term, they don't care because it's going to keep bouncing up and forth, and it's eventually going to go back up at some point, unless the market crashes, you know, super hard, which could happen, but who knows? I mean, it doesn't matter because we're intraday traders. So even if it does crash, you know, we'll just short it. Like there's no there's no stopping, you know, what direction we trade in. But yeah, I mean, that's my analysis of US 30. Me personally, I wouldn't trade it right now, but if you guys want to risk it, then I mean, you guys can. Let's go in the shorter time frame. Yeah, I mean, there's a lot of ways that I could go. This is a 10 minute, so it looks like if it breaks below here, it'll probably come down and test this zone. So if you're trading on the shorter time frame, which most of us are, you can actually scalp within here. But I would wait for a bit, give it some time, maybe a couple hours or maybe an hour or so, because the market's just opening up, so you might see some, you know, unusual movements in the market. Ooh, a euro odd hit TP2. All right, cool. Our NZ is about to hit, NJ is about to hit TP1 over here. But our euro odd hit TP2. So I'm just gonna post this in the group real quick. So whenever I post updates, guys, it's not that I'm looking at the chart. I have alerts set for everything. I'm not wasting my time like staring at the chart all day. I literally have alerts here, and then when it hits something, then you know we're good. So that's 32 pips. Let's post an update real quick. 32. No, I get lazy. I just copy a previous one. It's the same thing. It's not a big deal. It's just an estimate. So euro odd hit TP2. I'll share that with the rest of the group. Ask Aaron if he's gonna be on the webinar. He said I'm at the fucking bank. He's been at the bank all day. All right, cool. So we good with that. So that's cool. Hopefully it hits TP, full TP for 75 pips. But I mean, we'll see how that plays out. See what else we got here. So our KED JPY is coming down too. Looks like it's about to hit TP1, and then our other trade, NZD JPY. It's only a few pips away from TP1 here, 16 pips. So if you guys are in premium, you know, more money for you guys. Just keep stacking up those profits because it was a slow week. I mean, I'm not gonna lie, this week kind of sucked because I'm so used to NFP week being pretty nice, but you know, the past couple of months have been great. We've been locking in like 500 pips on an NFP week. But this week it's just been slow, which you know what happens. So that's why you have to manage your positions properly. You can't be over leveraging and doing anything crazy because you never know when the week's going to be bad. Like it's not technically it's not bad. So we're still hitting TPs, but you know it's not great. Okay, so let me keep looking. Blood said, man, I wish I took US 30 because my account was slow. Couldn't. I know it sucks, Blood. You were pretty, you know, you're pretty up for a while. I think you were scalping, right? Or you did something that hit your account. I think you're over leveraging or something like that, right? See, so Blood said, if it goes beyond TP2, would you want to set a sell stop at TP2? Okay, Blood, sorry, I see your messages here from like an hour ago. I don't remember what you were talking about. But you did say, so if it goes beyond TP2, would you want to set a sell stop for TP2? I think you might have been talking about, I'm assuming it's US 30, right? But yeah, so if you get stopped out in profit, you know, when trading any trade, I never recommend you re-enter the trade unless you do something like this. So this is like one caveat to that. So let's go over here for, I mean, it wouldn't really apply here because this hit TP really fast. So let's go over here real quick to London session. I'm just going to show you like how, you know, I personally re-enter a trade because I do it sometimes, but it's only because I really know what I'm doing. You know, I'm not randomly just jumping into a trade. What I do is I jump in. So I'm just going to set up the trade that we had earlier. I'm going to go over here to, sorry, I'm trying. So I'll just leave the pivots on. That's just, I'm going to show you how I re-enter this trade. So pretty much right here, I'm just going to set it up like we had earlier. So 1500. Our TP2 is like at 750. So I'm just going to put 750 there so we can see when it hits TP1, or I mean TP2, I guess. And so basically what I do here is I wait for it to hit TP2. Okay, right here, you get stopped out, right? That's what you mean. So you get stopped out at TP2, right? So once you get stopped out, you're out in profit. But if you want to re-enter the trade, what I do is I go on the shorter time frames. Sometimes a 5 minute, sometimes the 1 minute. It's usually if I'm scalping, like I'm scalping really quick, I'll go on the 1 minute. So what I do is I use the pivot strategy. So let me just make this full because we've already hit TP1. Technically, we're stopped out of this trade. We got stopped out in profit. So let me just make this smaller, and I'll show you what I do. So what you could do is if you're already in this trade, so this is the original entry right here, right? So once you're in this trade, literally if you get a pivot entry like right here, you can just scalp within. And that's how I made these profits. Where's my thing at? What's this, Evan? Yeah, no, so that's how I got these smaller profits because I wasn't taking the big move. So I did take the big move, but I was scalping within too. So you see these little smaller profits. Technically, this should have been like 1,000 for the big win, but I was just scalping in between. So instead of taking the huge move right here, I was just taking these scalp moves right here. So if you take this pivot entry right here, you would have won this trade. That's probably like one of these over here for like $100 or $200, $500, $60, something like that. But you could literally just scalp, just keep rescalping the trade. You got a pivot entry, another pivot entry. Like the strategy is too easy. It's literally, there's so many entries that you could have taken right here. And what I do is I take all these smaller entries within the big move. So instead of risking, a whole 1,500 pips on this big move, I'll risk that. And I'll also take these small pivots right here. So I make like 2 times, 3 times my profits. Again, right here, another scalp entry, that run. See right there, it would have basically hit TP down there. Another scalp entry right here. And I could count these. Watch, I'll let this run and I'll count how many we have at the end, just so that we can see what's good. All right, so it looks like this might have hit, or actually no, the stop loss should have been at the swing, which is right here. So it's like 228. I mean, there's a ton of scalp entries right here. Like literally, instead of just taking one big win, you could have like 20 small wins that add up to the big win. See another TP right there. Another TP. And you guys, like, everyone always asks me, how do I scalp? I literally do the same thing every single time. I don't make any changes. And it's real simple. It's like, so this might have gone stopped out. I don't know. It depends. Okay, so there's like one stop out right here for like 166 pips, but you would have locked in. Here's one for 159. So 1, 2, 3, 4, 5, 6, 7, 8. So 8 wins, 1 loss so far. If you're scalping the big move. So this is the big move right here. But you could have just made all these profits within. And then you would have had like a small loss right here for like 100 pips. Not a big deal. But yeah, blood. So if you wanted to re-enter a trade, this is how I would re-enter. I would go on the shorter time frame, and then I would take a scalp move within there. But I wouldn't re-enter, the full move, because the problem with the full move is you never know when it's going to come back up. So let me just go back to this again. And I'm going to close all these over here. And this is available to everyone. A lot of people ask me, how do I scalp like you? How do I learn to do what you're doing? You just go to the website, go to k2trades.com, and then sign up. And you have access to all the indicators and the strategies. But let me just go back to the to this right here. So we'll go to 750, which is TP2. Okay, so right here, see, you would have gone stopped out right here in profit, and then if you put a sell stop right here, like how you were mentioning, you would have been in drawdown right here. So instead of being in drawdown, you could have just been scalping within. because see, if you entered this trade, because you were saying you wanted to re-enter right here, right? So if you wanted to re-enter right here, then this puts on too much risk because you're already out in profit. Why would you go back in and then, you know, risk the whole amount again? Because if you did that, you would have gotten close to getting stopped out right here because your stop loss is a lot closer than it was over here, right? Because your stop loss is tighter now. So that's why I don't recommend re-entering a trade on the, you know, normal time frame. I would go in the lower time frame and then I would scalp within that one. And that was covered in the last webinar. So if you guys were in the last webinar, it was covered over there as well. But yeah, so that's US 30. Let me go back to the other questions over here. Let's see. All right, TJ said, good. Now it's on. I said, bro, can you explain how you managed yesterday's US 30 trade, which hit TP1 and went the opposite way? Yeah, so for that trade, I would have used the exit strategy. So like I just mentioned here, like once you reach TP2 or TP1, whatever you're aiming for, I always tell people to, once it reaches this point, move your stop loss to TP2 over here or wherever, you know, your TP was, so that you get out of this trade. Yeah, like sure, you missed like this big move right here, but you avoided getting stuck in a loss. But let's go back to that trade yesterday that you were talking about, just so that we can, you know, look it over. So the trade yesterday, and the reason I didn't take that trade was because the trend was just too strong. And I actually did take that trade, but I got out at TP1, like I mentioned. All right, so right here, I think this was the trade, right? I didn't even, you know, actually I didn't take this trade. But let me let's go over real quick. So right here is 63, yeah, 630. So that's when the market opened. We took the first valid entry, which was right here. Actually, I think I did enter this trade, but I got out really early. Let's see, 370. Yeah, I got out at TP1 over here. So I'll pull that up real quick. So yesterday, which was the second in the morning, yeah, so right here I did the same thing. You know, I told people I wasn't going to take the trade, but then I ended up taking it anyways, and I made 170 off that trade, because I just, what I did was I scalped it. So I took this trade, but then I exited at TP1. So basically, this is TP1 right here. And then this was the full move. So basically, and I have it set up right here too. Like I have TP1, TP2, TP3, etc. Basically, once price reaches TP1, you're supposed to move your stop loss to TP1 so that you can, you know, you can protect your position, because obviously, you know, if you didn't move your TP to TP1, like I mentioned, because I'm always mention that here. I always tell people, you know, remember to use the K2 exit strategy to eliminate your risk. So pretty much right here, once it reached TP1, I exited the trade, or I put my stop loss to, you know, that specific price point, because this was a strong trend up. So if I turn on the pivots, you can see this trend was super strong. So I knew this was going to be a very risky trade. And that's why, you know, I always recommend to move your stop loss and profit. And then if you want to re-enter and scalp it, you can do that. But, you know, just like I mentioned earlier, if you're going to get stopped out in profit, that's fine. Just take the profit and then you can scalp after that. But that's pretty much what happened here. So price was right here. It hit TP1. I got my profit right there. I posted TP1 hit. You know, this is your indicator telling you that, you know, it's time to exit the trade in profit or move your stop loss in profit or something like that. But if you did hang on to it, then, you know, you have gotten caught in this move right here. And, you know, unfortunately, that happens to a lot of people because a lot of people aren't monitoring their trade. Especially if you're trading US 30, you have to monitor your trade because this moves way too fast. But yeah, basically, if it reaches TP1, then you got to move your stop loss and profit. If you don't, you know, you take the risk, but, you know, it could have played out either way. So honestly, this could have played out either way. So right here, this was the entry over here. Right after entry, it came down again, hit our TP. That's when I moved my stop loss. and then it shot up. Or you can see right here. So look at the falling candle right here. It actually dropped even further. So just look at how it moves. I'm going to move this one candle forward. See, it dropped below it. So you had two opportunities to move your stop loss and profit. But if you didn't, unfortunately, it reversed on you. And that's why you have to always manage your position. Like if you can't manage your US 30 position, then you either just take the full risk or you just skip a trade until you can manage it, live. Because the thing with US 30 is it moves so fast. Like if you miss moving your stop loss and profit, then in a blink of an eye, it shoots the opposite direction. But okay, so let me keep going down. Angel said, so you're taking buys and sells in the 1 minute scalps. Yeah, Angel. So basically, I'm taking scalps, but in the direction of the trade. So, like I mentioned earlier over here. So in this situation over here, we were taking a sell position, right? So I'm only scalping in that same direction, because the reason I'm doing that is because I still want the full move to hit full TP. Like I'm still waiting for it to go to full TP. But while I'm waiting for that, I'm going on the 1 minute. Oops, where we're at. Yeah, so I'm on the 1 minute right here, and I'm making my small profits in the same direction. Like I'm still selling and then making my entries in that direction. So that instead of making this full profit, I can make like 10, 20 small wins in between. So instead of making, 1,500 off this trade, I can make like 2,500 or 3,000 off this trade. But it's something that you have to practice. Like when you start scalping, it moves way too fast. So if you're not fast enough, you're gonna miss the move, or you're gonna end up getting screwed. So I don't recommend this for beginners. But once you're comfortable with it, then yeah, you can make a ton of profit doing this within the actual full move. Sierra said I did 11 scalps on US 30 today. It was beautiful. Yeah, no, let's look at Sierra's profits today. She killed it today. I mean, she's been killing it like, I don't even know. You've been killing it all week, Sierra. Let's see, Sierra. I don't think she posted it in here. She posted it somewhere. She might have posted it over here. Yeah, I don't know where you posted your profits. Yeah, I remember you did post your profits though. We did post it in here actually. So let's see. We can see your profits over here. Oh, see, so here she goes. She scalped US 30 right here. Nice profits, back to back to back to back. Easy. And then she's been killing like all week. I mean, this is everyone. Like, it's not even just her. It's literally everyone on K2, We got Jonathan over here. This dude thought he failed his FTMO, but he took the sell today and he passed. So that was good. Razik over here, he made 2,400 off that trade. Here we go. Homie over here, he got 1,800 off that. He's been killing it too. Just taking US 30. This is mine. This is Ark. Ark's been doing really good too. Ark's been asking a lot of questions, so he's been learning and killing it. Here's Andrew. He made a ton of profit trading gold. Like literally the whole team's been doing pretty good this entire week, even though it's been a slow week. See, here's Sierra again. She killed it again the day before. She was trading US 30. She traded EA, straight profits. She made 850 that one day. And I think this is her real account. This isn't the FTMO. This is like her personal. She made a lot of profit off that. Josh over here with his indices. Jeff over here killed it with indices. Pretty much everyone. Everyone's been doing good. As long as you stay consistent, you don't get greedy, you can do really well. That's the key. It's all about consistency. Like if you're consistent, you can easily be profitable trading. Just don't chase the trades. Follow your strategy, follow your plan, and you should be fine. Sierra said K2 indicators are the truth. Yeah, no, you started doing really well. Like once you started using the indicators, you were like calling trades and making all these trades without even asking any questions. You were just literally just doing it on your own, which is cool. That's like our goal here. We want to teach you guys how to trade. We don't want to teach you guys to copy signals. We want to teach you guys how to actually trade, so you guys don't have to depend on signals all the time. Cap said you have French educators. No, we have some French traders, but they're not educators. So Kath, if you're in the group, probably just message in the chat. Just ask if there's like French, because I know we do have French traders. We don't have any educators that speak French. I can probably pay someone to do subtitles for you if that helps. But sorry, I don't know French well enough. But yeah, okay. So let's keep going down the Q&A. Wheelchair pimping. He said, how much is recommended for SPX? So for SPX, I think it's the same for all indices. I don't trade S&P because I just trade US 30. But generally, you need at least 1,000 to trade indices to have enough cushion to not get stopped out of trades, because obviously when you're trading indices, they move like 10 to 100 times faster than Forex pairs. So for Forex pairs, you could trade with like a couple, maybe $100. But for indices, it moves so fast that you need to have enough margin to survive these like spikes in price whenever they happen. So you'd have to have at least 1,000, which is what I'm assuming. You probably ask other people in the chat, but I know that the benchmark for indices is at least 1,000 in your account capital. You're not going to risk it all, but you need to have that much capital to survive the trades. Let's see. Anonymous attendee said, "What is the buy swing zone for US 30?" I'll just go back to the 4-hour and I'll just show you guys where we marked it up. I deleted it, but I can just put it back up. It's not a big deal. So and a lot of people are still trying to hop on this US 30, but so this is the first support, which would be at 28,126. That'd be the first bounce if it does bounce. If it doesn't, next support would be down here at 27,969. And then if that's not the bounce either, it'll be down here. There's too many scenarios here, like where it can drop and come back. So it's just, I don't know. And see, this is the problem here too, because it hit resistance too. So literally it could go in either direction, because the thing is, people are banking that it hits the support right here, right? But what people fail to see is that it actually hit resistance right here with this green one. So it could actually come tumbling down. And that's why I wouldn't recommend trading US 30 right now. It's just way too risky, because here, if I turn on the SRs, you can see that it hit. So it came down, rejected off the support, but then it rejected off this part too, which created into a resistance. So it created a support, then it created a resistance, and then it fell down further and created a new support. So it's like a staircase. It dropped down, retraced, dropped down again. It might retrace a little bit again, then it might continue down. So that's why I wouldn't buy it right now. It's just too risky. Plus tomorrow's NFP, so expect some crazy movements tomorrow morning. But okay, so let's keep going. Big Auto said, "Is US 30 going for a buy?" Same situation. I have no idea. The same analysis here. It could literally go either way. It could either drop further, or it could reject off here and shoot back up. There's too many different possibilities. So it's like it's way too risky. Let's see what else we got here. Rob said, "If news comes out positive for NFP, the US 30 will buy all day." Possibly. Here's the thing, even with the news, if the news is good or if it's bad, it could still push in either direction. Like, just because the news is good, it just depends on where they want to push the market. Because the thing is, so say if the news is good, right, and then people start to FOMO in for a buy, what they'll do is they'll spike price up to maybe this resistance or somewhere near it, and then they'll drop it back down to stop everybody out, and then they'll shoot it back up. And that's why I don't like to swing trade indices. Generally I like to trade on the 10-minute, because if you're on the 10-minute, you can get in and out of these trades like pretty quickly and not get caught in those like weird movements. Like right here, if you took right, so this is the first, so let me just take this off. this is the first support right here. So if you guys took this buy off the support, you could have scalped it right here for like a couple hundred pips, or even a couple like 1,300 pips right there, and then you would have made some money. And then again right here, as it came down, you might have gone screwed. So in the same situation, it comes down, test it, and then people are all trying to predict where the buy is going to be, right? So the problem with that is that it can keep pushing down. And that's how the market tricks you. I mean, it's kind of fucked up how they do it, but you know, basically what they do is they'll push it down, and then they'll give people a little gimme. They'll give people a little win right here, right? So you win some money right here. They do it again right here. People enter another buy right here, but then they get screwed. They get stopped out. So then they do it again right here, right? And they're like, all right, we'll give them another gimme, one more win for these guys. And then they give you another win right here, because you have a win, you have a loss, you have a win. And then right here, people are probably predicting that it's probably going to bounce up again. But what's going to happen? They're going to drop it again. So you have another loss. So, you know, a lot of people, you probably are familiar with this. You guys are familiar with winning, then you lose, then you win, then you lose, then you're like, crap, I'm at break even. And then on your next trade, like right here, you're going to go like, you're going to double up. You're going to over leverage and put your whole account on this one trade. And you're like, it's got to go up because it's already tested it how many times. And then what happens after it, you over leverage and put your whole account on there, it drops down and you get stopped out. And then you blow your account and you're like, crap, I should have just, you know, use proper risk management. But that's how they get you. It's psychology. It's like literally they give you a win to make you think what you're doing is proper, and they give you a loss because you're like, okay, that was a small mistake. And then they give you another win, and then you're like, all right, market's back to normal. But in reality, it's not. And that's why you can't just keep falling for, you know, these tricks, because this has happened to me too. I've blown accounts in these situations where I keep getting tricked into these like little movements that you think are going to play out. But you know, I've been trading for too long to fall for this anymore. And that's why when we get into this situation, I just avoid the trade, you know, completely, because it's just too risky. And you know, I'd rather just not trade when the market's being manipulated, and I'll just wait for it to move normally, like how it does, like over here. Like, you know, we were taking a whole bunch of buys here, and it was just easy money, compared to like right here where everyone's trying to guess where, you know, the direction of price, or trying to guess where the buy zone is. But I mean, it's really up to you guys. If you guys want to take that trade, you know, feel free. But me personally, it's just too risky. Let's see, Aaron's in the chat. Aaron said, I'm at the shop right now. Car broke down. Aaron, man, why? Not bad. Aaron said, don't make a scene. Hey, why doesn't Aaron just text me? It'd be easier. Aaron said, it's horrible reception where I'm at. All right, cool. My bad, Aaron. I know you didn't want me to read that out loud. But all right, so let's keep going. All right, Angel said, hey, Shawn, can you look at EuroCAD? So let's go to EuroCAD real quick. But yeah, Rob, you know, going back to your question, you know, NFP literally could push market either way. That's like the most manipulated news event. So I don't even trade during that day, because I mean, like literally, if it's good news or if it's bad news, it could push in either direction. It just depends where people are trading, because obviously the banks and the institutions aren't going to make it that easy on, you know, us as retail traders. Let's see, your Angel said EuroCAD. So I'll show you guys how I analyze EuroCAD. I'll do it real quick. Make a chart, add the zones. And there's too many zones here. See, when there's too many zones like this, I just avoid the trade because it's just too risky. And I'm sure you guys can already tell that I don't like taking risky trades. I've been trading for too long where I don't like to gamble anymore. I literally only take trades that I think have a good chance of winning. You know, because you know I'm in this for the long run. I don't really, you know, small profits here and there. I'm not here for the quick money. I'm here for the long money, which is, you know, what I advise everyone else to trade as well. But you know, a lot of the traders here are somewhat new to trading. So I know I've been a new trader at some point, and I was like that too. But after trading for so long, It's not really about the quick money. It's more about surviving this game and, you know, stacking up your profits and letting them compile. So let's see, Euro CAD right here. So I've already drawn the zones. You can see, like I mentioned before, price moves from zone to zone. The price goes up, rejects, comes down. Price up, rejects, comes down. This is probably another zone right here, but it didn't, you know, probably didn't create. Or it was probably a zone over here in July, but then since we're so far ahead, it's not a zone anymore. But you know, like right here, went from zone to zone, 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 zone. But yeah, once we have the zones, then I turn on the pivots. So you can see here that we're clearly in a downtrend. Our price is attempting to shift upwards. So you can see the shift is down, but price is swinging upwards. So, you know, what might happen here is it's already tested the zone, you know, a ton of times. So what I see happening here is probably going to push up. And then once it gets to this point, it's either going to confirm a reversal and shoot up further, or it might reject down again, like it did right here. You can see price came down, came up, rejected off this point, came back down, retraced, rejected off this point right here. And it's literally just like, it's doing like a small staircase. It's doing like a trend continuation downwards, because obviously it's been in a strong downtrend since this point. So it's literally doing a staircase, you know, shift, swing down, swing up, swing down, swing up. You know, I would consider this an Elliott wave, or I mean, I guess it could be, because it's like a double top right here. So if you guys are familiar with Elliott wave, they move in like impulses, or I mean, there's different ways to analyze it. It's like one tool that I used to use before, but I don't really use it anymore because it's hard. Like literally the Elliott wave is super subjective, because a lot of people will analyze it. Some people analyze points as actual points, while some people will just, they won't even count that. So like right here, like this could have been a point where it retraced up and it came down, but if you wanted to do the full move like that, see, like this could have been a pulse, or this one could have been a pulse, or it could have been all the way down here. It just really depends on how you analyze it. See, this is probably what could happen here. So if you're looking at this angel, it looks like, you know, since it's in a strong downtrend, this is what I probably see happening right here. It's probably going to come up, reject off this point, and then continue down. But who knows? You know, tomorrow's NFP. Usually the day before NFP, you'll start to see either a lot of consolidation or a lot of weird movements in the market. So this is probably what I see happening because it's in a downtrend. Obviously, you know, I trade in the direction of the trend. So my bias here is going to be a sell. But, you know, who's to say that it doesn't reverse up from here, which it can. We just really wouldn't know until it gets to that point. But yeah, the candle closed in about an hour. So if it closes bullish right here, then it might be a buy up to this point. How much is that? How many pips? See, and that'd be a nice scalp right there. It's about 30 pips. So you could probably take a buy right there. You know, I might even call this trade, maybe, possibly. But see, it pushes up too far. It's too risky to take a trade that far out and not be super certain that that's where it's going to play out. Because, you know, last thing you'd want to do is enter this trade, and then it comes over here and then reverses, just like we marked up earlier. But it is rejecting off. So if you get a, let me turn on the momentum candles. All right, so we have a buy right here. So since we do have a buy momentum, or, you know, it's a buy bias because there's a bullish momentum right here, it'll probably continue up to this point. And then once it gets to this point, it'll either break above or reject back down. So it just really depends on how it plays out. But, you know, like I mentioned, since it's NFP, it's a super risky time to trade. Because let's see, is it just NFP tomorrow? Is there anything else? Yeah, it's actually unemployment for Canada and for US. So, and then there's a tentative GBP news probably at midnight when London opens. But I mean, this is a lot of stuff that could affect the market from now until tomorrow. But it does look like a decent buy. So if you want to take that buy, Angel, you probably could. I would just make sure to move your stop loss once it gets near the zone over here. So if you want to enter on this close, probably shoot for like 62 pips. And that's not a random number. The reason why I put 62 pips is because it pulls down right here. You know, obviously, best case scenario, you want to put your stop loss at the swing down here, but this is just way too risky. For 130 pips, I'm not going to take that risk because in the other direction, it's too far out. Like I don't see it pushing out that far, but who knows, it might. But yeah, so that's it for your CAD. I'll probably look at it later once we get closer to 6 p.m. when I look for entries. But this is probably how I see it happening right here. I probably see it pushing up slightly to this point, and then from there it could either go in one or two directions. So I'd be careful with that trade. And this is a risky trade too. I mean, we've had, you know, a mixed bag of wins and losses with the year CAD because it does move irregular. You can see right here, it moves pretty weird. Let's see. All right, Andrew said NZD almost at TP1. Finally, right? We've been holding on to, okay, cool. It's coming back down. So that's NZD, KJPY. I mean, yeah, JPY pairs has been messing around like literally all day. Came down, shot up, came back down, and then sideways. You're odd over here, came back down. So they're all kind of retracing right now, and that's normal for NFP. It's just market's gonna move weird for a while. All right, Andrew said to check out silver. So let me pull up silver real quick. All right, we got silver right here. And I'm surprised you're trading silver. Such a cheap pair. I tried to trade it one time and I made like no money, so I'm like, I'm never gonna trade this again. Because it's like, if you're gonna trade it, you might as well just trade gold. But I mean, it's not a bad asset to trade. But here we go. So first, we're gonna look for the zones. There's a zone up here. Zone right here. Zone right there. Big zone right there. See, the problem with this zone right here is it's like way too wide, so I just probably just draw a line right there. So the zones are too spread out. I usually just put a line right there just to identify it because I don't want to draw a huge zone down here. There's like no point. And I think that's all we need because price isn't even near this bottom area, so we can just hide the SRs. Andrew said silver 28,730. We'll turn on the pivots now to see the trend. Yeah, it's kind of iffy because see, it swung below the pivot, so and the pivots are angling down and they're starting to spread out. So when it starts to do this, this usually indicates a swing in, you know, momentum and a reversal in trend. Like right here, same situation. I'll just show you how it looked right here. So right here, price is swinging up. So same situation here. See, price swung up, and then the pivots. So price broke it, retested, then it swung back up, and then the pivot started angling up and spreading out. So as they did that, it was a big bullish move upwards. That's kind of similar to what's happening over here. So price swung below, retraced up, rejected, came back down, and then now the pivots are angling down and spreading out. So if price was to break below here, well, you see the rejection right here, but if price was to continue down and break below, then I anticipate it to continue downwards pretty far. But if it does reject off here, so say if it rejects off here, then it crosses back over the pivots, like it did right here. So same situation, price came down, it crossed above, then it came back down, then it shot up, and it shot from here basically up to here. So it's the same situation right here. If it rejects up, closes above here, then I anticipate it to continue upwards, because obviously gold and silver moves kind of similar to each other. So if gold is bullish, silver is probably going to be bullish too. But they've been bullish for a long time. So if you look back to here, they've been bullish for the past, I don't even know, since March. They've literally been bullish since March. So the thing is, it might be time for a retracement. I mean, it did drop right here, which could happen again, because like I mentioned, if it closes below this point, it'll probably, come down and test the zone again for a double bottom. So like, I know I mentioned a lot of these, price action terms like double bottom and stuff, but I don't base my trades off that. I base my trades off the K2 indicators and off momentum strictly. But it's something that's, you should still look at price action just to have extra confirmation. But I wouldn't just base all of your, all your entries strictly off price action. Like I always recommend that you should tie it with something else to give you extra confirmation. Because if you're just tying it with one strategy or one type of analysis, then your trade is only one-sided. You want to make sure that you look at it from different aspects to make sure that it makes sense, in all different ways. But yeah, Andrew. So for gold, I mean silver, I really don't know, because we'd have to wait to see what happens here. So I'd probably hold off on it for a bit until you get, extra confirmation that it either closes below here, or if it rejects and then closes up there, because that creates for two different scenarios. Like I mentioned before, if there's too many scenarios, then it's too risky. But for here, you have one of two options. It's like you either sell and you pray for it to go down, or you buy and you pray for it to go up. So this is a little less risky compared to, US 30. Keith said, thoughts of scalping SPX on the 5-minute or 1 minute? I know you don't trade it. We can take a look, Keith. Yeah, like even though I don't trade it, I mean, it moves the same way as US 30. The only problem with S&P is that I just don't know how far the pivot should be. So we could just look on the pivots. We'll go on the 5-minute first. So yeah, if you see these entries here, obviously there's like clear pivot entries right here. So if you guys aren't familiar with the K2 pivot strategy, so for one, identify trend, K2 pivots, identify retracement, identify rejection, identify K2 or valid K2 signal, and then lastly enter on open following candle. Simple, right? So if you guys are familiar with the strategy, obviously first identify the trend. In order to identify the trend, you want to make sure that price is angling downwards. I mean, you want to identify that price is below the pivots are angling downwards, and they're spread out. So right here, all those requirements are met, so it's obviously in a downtrend. You want to identify a retracement. Sorry, okay. I just want to make sure it's like looking, because it's all spread out weird because price moves so much down here, but I'll just move it up here. So price is trending down, identify a retracement. Price came down, retraced off this point, and shot up. Next, identify rejection. Price came down, retraced right here, rejected off the K2 pivots. And lastly, identify a valid K2 signal. So requirement 1 was met, requirement 2 was met, requirement 3 was met, and here's requirement 4, identify a valid K2 signal. So if you enter this right here, it obviously would hit TP, at some point. And then same situation again right here. So this is obviously a win. Same situation again right here. Same thing, requirements met, trend down, retracement, rejection, valid K2 signal. Right there, another winner. All right, another one right here, same situation. Price is trending down. Retracement right here. I mean, I guess you can consider it over here because this is like way down here. So price is trending down, retracement from here, rejection, K2 signal, sell, another win. So yeah, Keith, I mean, you like, I'm sure you're aware. I know you just asked this question, but you know, I know you've been using the strategy for a while, so you know exactly how it works. But you know, for the new people here, it's real simple. Like you could literally use this on any asset, any time frame. It literally doesn't matter. So there you go, another win right there, another win right there. This looks like a close one. It got so close to stop loss, but technically it's still active. Another one right there. But yeah, Keith, so pretty much, you know, same situation here, but I would probably, yeah, I would wait for the sell signal similar to right here, because price is trending down. We have a retracement or rejection, retracement right here, or retracement here. They both count as retracements, but this would be considered a rejection. So we'd have to wait for a rejection up here. And then if that comes down, we get a sell signal like this right here. Obviously, we could write that down for a scalp. So that's on the 5-minute. And it works well. You know, the thing with S&P is it moves just like US 30. It's just like US 30's little brother. So, you know, this works on the 5-minute. And then we can just look at the 1-minute real quick too to see, you know, how it plays out on there as well. So let's move to the 1-minute, like you mentioned. But I wouldn't trade on the 1-minute by itself. Like the only reason I trade on the 1-minute is because I already have the entry on the 10-minute. I don't just go on the 1-minute. I'm like, all right, I'm gonna scalp here. I would have to go on the 10-minute, you know, find an entry over here. So the entry would have been right here, obviously, because it's a valid pivot entry on the 10-minute. So here's the 10-minute. That's a valid pivot entry. Price is trending down, retracement off this point, rejection off here, valid sell signal. All good. So once we have that, I'll just go back to where that trade started, switch to the 1-minute, and then you can take entries from here. So this is the full move right here. I'm just gonna hide this, or I'm gonna leave it there, but I'm not gonna follow it because we're scalping. So right here, you had a buy signal, right? There's your sell signal right there, Keith. So this is the full move. We have a sell bias because we're taking a sell in the 10-minute. So here's the 1-minute right here, entry right there, and then it hits TP, right? Again right here, next entry, right there, TP again. What's next? Another retracement right there, another sell right here. And that's where price currently is. So right here, I mean, you probably would have moved your stop loss and profit because it pushed down pretty far. If not, you would have gone stopped out. Same situation right here. And this is why we always recommend, you know, proper risk management. So this would have been a loss, but this could have been avoided as a loss, as long as you move your stop loss and profit. But it's all about risk management, you know. But yeah, Keith, so, you know, just looking at this is exactly how I would scalp it, and how I recommend scalping if you want to scalp on the 1-minute. I wouldn't scalp it by itself. I would scalp it within an actual move. Let's see. Oh, cool. Sandeep's here. So Sandeep saying, what's good, Shawn? How do we identify liquidity pools using the indicators? So liquidity pools are, I mean, they're kind of similar to like the K2SR zones. So the K2SR zones, although they're support resistance, they could technically be used as liquidity zones too. It just depends on how you analyze it. So, you know, looking at the K2SR over here, or not the SR, the SR2, this is where you can identify where liquidity zones are. Because obviously, you know, where the K2SR zones are is where there's liquidity, because it was like I mentioned earlier, a lot of traders, like majority of traders, like to trade, normal price action, which could be a lot of different strategies, but one of the common ones is, trading off support resistance. So if you have the support resistance plotted on the chart already like this, you can see that generally when price reaches these points, there's a ton of liquidity there, or volatility, same difference. You can see once price reaches here, there's a lot of liquidity. Price is moving around, and then once it breaks out, it moves in that direction. So generally, once price reaches this point, it can do one of two things, or actually it can do one of three things. It can either, so price reached, so it tested it right here, it tested it again right here. What happens here once it reaches this point? It can either continue upwards, it can either reject, or it could go sideways. So, I wouldn't consider these exactly liquidity. Like, you have to look for areas where it goes more into detail, depending on, what you're looking for. Liquidity zones, you want to see where a lot of rejection points are. So you see a lot of like wicks, like you see where they get wicked out a lot. I'm trying to look for an example here. Like somewhere over here. So you can see price comes, and then as it reaches the zone again, you see these huge wicks, because those are liquidity pools. Because price comes down, then it pushes it back up, like the institutions or market makers or whoever pushes it back up. Same situation right here. It comes down, pushes it up. And if you see a lot of wick areas, those are areas where there's a lot of liquidity. Well, I wouldn't say necessarily liquidity, but it's like where price is getting pushed back and forth. But this is one way to identify it, because it's like pretty common sense. Like, price comes down, and once it touches the SR, it shoots back up. Same situation, comes down, touches the SR, shoots back up, touches SR, shoots back up. Same situation here, touches the SR, shoots down, like 1, 2, 3, 4, 5, 6, 7, 8, 9, like 9 times. And this is on the 4-hour candle. So you can see that, these areas right here, there's a lot of liquidity. But yeah, let's see. All right, we have one more question from Denise. Denise said, how do you do risk management class? Oh, can you do a risk management class for indices? Denise, so I personally only trade US 30, so it's kind of hard for me to explain, other indices. That'd probably be Wade's area of expertise, because Wade actually, he mostly he focuses on indices. That's like his main asset that he trades. For me, I focus more on just US 30 and Forex pairs. So, for those, it's a little easier. For indices, it's a little different, because each indice is valued way differently. So like S&P is cheaper than US 30, while the German DAX is worth a little more than the US 30, because they move like in blocks of like 10 pips. So, when you're trading indices, they're like way different. But, like a rule of thumb for me is, like, say you were entering a buy, like right here. Like, say you wanted to enter this buy right here. Let's rewind. If you're going to enter this buy, I would always put my stop loss at the previous swing, which is right here. And this applies across the board. This works for Forex, this works for stocks, it works for indices, it works for cryptos, like pretty much anything. Because generally the previous swing is like the last point before price, either reverses or goes the opposite direction. But you can see right here, if you put at the previous swing, you probably would have held on to this for a long time, but it would have ended up pushing on upwards. And that's how I would, classify risk for not just indices, but for any pair. The thing with US 30 is I always set it at 1500 pips, because I've done a ton of testing. Like US 30 is like my favorite asset to trade. So I've done so much testing on US 30, which I found that 1500 pips is the sweet spot per session. So if I go over here and if I let's see. So this is London, this is New York. There's also Asia session, but I don't really like to trade this asset during Asia session. But this is like one way you can do it. You can go and like mark up different sessions, because this is how I found out how it works. for this specific pair. So the market turned over right here. You just pretty much mark up the sessions, and then you just measure how many pips does it move per session. So, I mean, this was an unusual session. It moved like, this is considered 4,000 pips. But you can see here normally, like Asia session, like a London session, it only moves about 1,500 pips. See right here? That's a full movement. So that's how I'm able to figure out what's the good, range of movement that you want to catch your trades from. Similar to right here. This is London session open up until New York. You can see it moves like a total of, what did I say earlier? 1,500 pips. Same thing as it happened over here. And it just has to do with a lot of testing. If I was more familiar with indices, I could probably explain it a lot better. But just looking at how price moves here, you can get a good understanding as to how it moves generally. On some days, obviously, it's going to move faster. Of course, during New York session, it's going to move a lot faster than London because it's actual US, asset. So this is like 3,000 pips. But that's one way to identify, how much movement happens per session. And it's just going to come with practice, like the more interested you are with a pair, the more data and back testing you'll do for that specific pair to identify exactly how much risk you should be putting for each specific thing. But generally, you should only be risking about 1%. That's going to be like the general consensus for indices because it's so risky. And then for Forex, obviously it's going to be 3 to 5%. But that's all good. That you have to go into like deeper analysis for that to identify, because like I mentioned, US 30 is worth a lot more than S&P, and the German DAX is going to be worth more than the US 30 as well. So if you want to go more detailed with indices, I'd probably reach out to Wade, and he can help you out with that. But let's see. So it looks like there's no other questions, guys. So if you guys have any other questions, feel free to put them in the Q&A. Otherwise, I'm just going to pre-scan the charts for any entries for the 6 p.m. candle close, which is in 30 minutes. It's still a long time, so it's not going to, I'm not going to have any entries right now, but I'm just going to mark up and highlight any specific pairs so that once it comes time, we'll be ready to make some entries. But yeah, I'll just go down the list right now. If you guys have any other questions, feel free to put them in the Q&A. Let's take a look. Odd CAD. Yeah, this was one I was looking at for Angel earlier. Like I mentioned, we'd have to wait for it to break outside the zone because it could literally go in either direction. So it could literally go, it could break above here and then shoot back up to correct to an uptrend, or it could break down here and continue its downtrend and either test here or break through it. So nothing there for odd CAD. Odd CHF. It doesn't look like there is. This technically would have been an entry right here, but I didn't take it because it was too close. So obviously, yeah, it would have came down and then, like I would have anticipated, rejected off this point and then come back up or continue downwards. So there's nothing really there at this specific time. Odd JPY, nothing there either. Although it might come down and test the zone right here. Let's see how far is it. 36 pips. It's actually pretty decent. But me personally, I don't like trading unless there's like some sort of catalyst for me to enter this trade. I was thinking for this too, if it breaks below a zone, that actually gives a pretty good entry for it. Not a great entry, but it's a pretty decent entry. I started noticing that. So I don't know if you guys noticed this, but on the pivots, it's kind of similar to the zone strategy, but instead of waiting for it to break and close past the zone, you can just wait for it to break and close past the pivot. So right here, we have a sell signal, but it broke past this pivot and closed below. So if we took a sell right here, boom, winner. It's actually real nice. Yeah, you know, this is the thing with K2. Like with K2, I never stop, you know, thinking of new ideas. Like with a lot of other strategies, you just like people follow one strategy and they stick with that, you know, forever. For me, it's like it's always evolving. If I see something new and I see something that works, I'm gonna let you guys know, because you know the market's always evolving. You can't just stick with one strategy and not change it up or not make any adaptations to how the market, you know, how the market changes, because the market's always changing. And that's why a lot of people don't last in trading. You know, they'll be good for a few months and then their strategy sucks and then they quit. But with K2, you know, we've been pretty consistent all year long, you know, up until last year when we started, because I'm always making adjustments. And, you know, this is what I like to do. So if I find something new, I always end up, you know, coming up with new things that we can implement in the market in order to, you know, better our strategy or, you know, better any of our analysis that we're doing. But yeah, like I mentioned here for ODJPY, this looks like it probably would have been a good entry if we were doing what I just explained right now. Basically, we had a sell signal and then it broke past the pivots. And then if we took a sell right here, it would have been nice. So this is something that I might implement. Maybe I'll create a new strategy and I'll, you know, break it down for you guys. But it definitely looks like something that's promising. So I'll keep that in mind. There's no entry there right now. Let's see. Yeah, I would have to test it because this looks like, I mean, it looks like it's scenario based, because, or I mean, it'd be good for scalping. So right here, price broke with the buy signal, and then you could have scalped like 12 to 15 pips there. But I'll just stick to what we're doing now. That's just something that I noticed when we were looking at the chart. Odd NZD. Let's see. No, we would have to wait for a sell signal. So if we got a sell signal, like right over here, that'd be, you know, considered a pivot entry. Plus, it would also be considered a zone entry. So I have this lined up here. I wanted to take this trade, but it was too close to the support down here. And, you know, good thing I didn't take it because it would have been in consolidation right there. So if we get another sell signal, that'd probably be, you know, double confirmation, because it'll continue in the previous entry over here. IGUSD. I mean, technically this could be a decent one. I'm just worried because it's a USD pair and there's you know, obviously NFP next week. See, Capson, sorry, I missed the answer of the impact of positive NFP with indices. Hey, Cap. So with NFP, you know, if it's positive, technically the indices might go up, but you know, there's no way to really tell, because looking at how US 30 is here, there was no way to predict that this was going to shoot down. You know, the only reason we took a short was because we were applying the specific K2 strategy. But, you know, just looking at the market normally, so if we back up here, before that drop, it was so bullish. So there's no way to really identify why this would have happened. Similar with tomorrow, if we have good news, it could still drop. There's no, like, I mean, there's a correlation, but I wouldn't really correlate it, you know, 100%, because the thing is, the market makers and the institution will still move price however they like to move it. There's not one specific way for them to, you know, push it based on the news. Because I can't remember what month, but I think like it was like June or July, like the NFP, oh no, what was it? It was when COVID just like got bad. It was probably like May. So in May, the news was super bad because unemployment was like at all-time high. But what happened? The stock market continued up, which is weird. But that's like one example why I don't base it off news. I would just base it off, you know, how price is moving at the time. So I'd be careful with that. You know, I wouldn't base everything specifically off news. I think the unemployment data is probably going to be better because a lot of places are reopening. So the last unemployment data was 10%. They're predicting it to be 98%. So yeah, I'm definitely anticipating it to be better, but I mean, we'll have to see how that plays out, because you know, it's just going to be hard to tell. And the thing is, it might not even affect the market. It might even go sideways. So this is what happens sometimes. Like sometimes they'll have unemployment data, it'll go sideways, and then when you least expect it, they just spike it somewhere. They spike it up, or they spike it down, you know, when you least expect it. And it's really a gamble. It's like literally, if you're on the good side, on, you know, on the proper side, then you would have made profit. Or if you're on the other side, then you could have, you know, either blown your account or lost a lot of money. And that's why I just thought it's not a risk that I like to take, because you don't really have an edge in the market. Like, sure, you do have the K2 indicators if you have access to them, but it doesn't give you, you know, that edge where it's like, oh, I'm sure it's going to come down, or I'm sure it's going to come up. It's literally a gamble. You might as well go to like a casino and, like, you know, play roulette, because it doesn't matter like what you know, unless you have some inside information. You know, price will move how it wants to move, you know, depending on however the institutions want to move it. But yeah, okay, so I was looking at AUD/USD over here. It does look like a pretty decent trade that it'll continue down, but reason why I wouldn't call this trade is because it's so close to this support down here. So it only gives us enough cushion to catch like 20 pips, which a lot of people don't like for some reason, but it's just too risky. And it looks like it's pulling up right now anyways. CAD/JPY, you know, the market's just moving weird. CAD/JPY was in profit earlier. We were waiting for it to hit TP1, and then it shot back up. CHF/JPY, nothing there. Euro AUD, same situation. We hit TP2, and then it retraced back. Nothing else from there. Euro CAD, nothing there as well. Euro CHF. Technically, this would have been a valid sell right here, but, you know, retraced up. And then this would have probably been TP1 right here. So if it hit TP1, it would have probably, you know, we probably would have gone pulled out of that trade. But I didn't call this also because it's too close to the support down here. Euro GBP. This would be a valid buy right here, but same situation, too close to the next zone. It's only 20 pips. Plus it's against the trend, which I don't like to do. Euro JPY. Nothing here because there's a big zone. So technically this would have been an entry right here, which would have hit TP, but I didn't call it because it's too close to the support. Euro NZD, I wish I called this trade. The reason why I didn't call it was because it was a little late, and the movement was just too, it was already in profit. It was like way up here already. So it was in profit like 30 pips. I was like, I'm not gonna call this trade, and then people get mad because they can't get in the trade. Right here, USD. Yeah, this could go either way. You know, the news tomorrow is supposed to be good for the US for unemployment. So this might come crashing down actually. Because if you guys aren't familiar, you know, like I mentioned before, but a lot of people don't realize, when price is going up, that means that the first currency is stronger than the second currency. If price is going down, that means that the second currency is stronger than the first currency. It's basically like a scale. So if the scale is going down, this currency is stronger or heavier. If price is going this way, going up, this currency is heavier or stronger. And that's kind of like why it has this right here too. See, it's like a little seesaw. But yeah, you know, looking at Euro USD, I would like to take a sell, but like I mentioned, it's too close to the support. See, this is what I would like to see. Like if I would see a retracement up and you get a buy signal like right here, and then we get a sell signal somewhere over here and it pushes it back down, then I would take it because that would be a valid pivot entry. GA over here. This is another one that I wanted to call. I should have called it with EA because we called EA and it pushed up nice, hit TP2. It would have been good for GA too, but unfortunately I didn't call it. GC, this would be good if we got a buy signal. So if we got a buy signal up here, then we can take a buy right there. But there's nothing there right now. GCHF, nothing there. GJ, see, this is a risky pair to trade. GJ is risky because NFP's tomorrow, and NFP, you know, if the US dollar is strong, then the JPY is going to be weak, and if that happens, it should shoot up. So this would actually be a good buy. So right here you can see prices attempting to push up. If it pushes up and closes above here with a buy signal, then we can enter a buy right there. GN, nothing right here. I mean, technically it could be so if this closes below here with the sell signal, like right here, if it closes right down here, we could take this for a sell and it'd be a nice profit down there for about 100 pips probably. It's 120, but I'd probably shoot for just 100. GU, same situation. You know, I'm anticipating the US dollar to be strong. So if it's strong, then we can see this push down right here. And then if we do have a sell signal. So we just need price to push down right here and close below. And then if that happens, then we can take a short right there. But it doesn't look like anything's going to happen from now until 6. We have 20 minutes left on the clock. And there's not really much going on. The market's just slow and it's dead because NFP's tomorrow. This is probably, it's pretty normal. Like a lot of people who aren't familiar with the market, every month we have NFP for like the first week of the month. And generally this happens. It moves slow for the day before. And then tomorrow you'll see like a huge spike down or a huge spike up. It could literally go in either direction. So Thursday on NFP week is usually a pretty slow day for us. Nothing here. This would have to close below for us to have an entry. NZD-JPY, this was in profit. We were looking at this earlier. Yeah, Andrew's still here. So me and Andrew were looking at this earlier. It was so close to hitting it, but it didn't hit it yet, unfortunately. We'll just have to hang on a little longer. NZD-USD, this looks like it can drop as well. You know, it's kind of similar to everything else. Is the market closed? Yeah, it's weird. I haven't. Oh no. Okay, there we go. I was like, I didn't see a bid-and-ask price there, but yeah, same situation with all the other USD pairs. I'm anticipating all the USD pairs to go down because of NFP tomorrow, but then you don't want to get caught up in that trade. So I would have to wait for it to close below, and then I'd probably ride it down from here, to the next zone or somewhere around that area. UCAD, I'm anticipating this to go up. Because NFP needs tomorrow, and then same with UC. So I anticipate UCAD to go up, UC to go up, and UJ, because all of these have US dollar as the first currency, and if NFP news is good tomorrow, then the US dollar should be strong, and USD should be going in that direction. So for all the pairs that start with USD, I anticipate them to go up. For all the pairs ending with USD, like odd USD, I anticipate these to go down. So, I mean, that's about it. I've scanned all the pairs. I didn't really see anything worth taking, so it doesn't look like we're really going to have much to take. But yeah, if I do see anything, guys, I'll probably just I'll share it in the premium. But it just doesn't look like there's going to be anything for the 6 p.m. Maybe we'll try again at the 10 p.m. But then again, NFP, and then there's NFP tomorrow, and then there's also Canadian unemployment data. Plus, there's tentative GBP news tomorrow too. So it's just going to be too risky. So we'll see if we find anything. If not, then we'll probably just call it a week early, just to conserve our capital for next week. Otherwise, I think that's about it, guys. So it doesn't look like I have any other questions. If you guys have anything else you guys want me to analyze, or you guys want me to show you anything, feel free to reach out on Telegram. I'll be available on there pretty much all night. So thanks for showing up, guys. I'll have this up on YouTube shortly, so you guys can rewatch it if you'd like. Otherwise, you guys can contact me and I can give you guys, your own personal analysis for, whichever pair you guys want me to look at. But yeah, thanks for showing up, guys. And then I'll see you guys in the chat.